Hi guys, this is Teacher Party. Now I want us to do a practical example of the weighted average like I promised. Okay. Here it's the paper one for 2021 November 2021 paper one question paper, and they're giving you a client here, question one. Chloe and Kaylee own CC Sound, which sells earpods and speakers. They use the periodic inventory system for all stock, which means they count their inventory after a while. So maybe they'll have stock count at month end after 2 weeks or at the end of the day. So that's what they mean in essence. The financial year ends on 31 October 2021. Chloe and Kaylee are granted 30 days by suppliers to return stock that they were not satisfied with. They are not satisfied with. So stock number one, earpods. So they use the weighted average method to value the earpods. And then speakers, they use the first in, first out method to value the speakers. Okay, so how are we going to calculate the stock at the end? The value of stock at the end. So let's first use this method. So this method, it will have your opening stock plus purchases plus minus your returns. Okay. Let's put it here. In fact, let's do calculation one or alternative one, alternative method. Calculations one or alternative method one. So you know me, guys. By now, I love solve for x. So x equals to, they've given you the value of that's your numerator plus the value of purchases which is 416 open okay. Then they're saying 60 of the earpods. 60 of the earpod units purchased in December were returned to the supplier as they did not meet the quality specification. So minus the pods that were returned. What were they purchased? For their purchase price? The purchase price December, it was 250. So divide by 400 plus 800 plus 500 plus 100 minus 60, which is the ones the goods returned, let me specify it. Apologies for the noise, guys. My neighbors are awake, so this is not early hours in the morning. Okay, let's simplify it further. So remember the 416 is there. Remember the 416 is there. 200 plus 150 plus 66,000, which is 416. Now the 250 Okay, guys. $400 plus 800 plus 500 plus 200 minus 60. Let's simplify it further. Verse 31. It's 288. It's 288 using this method, which is, let's verify again. Affect is 400 plus 1.9 minus 60. So that gives you 1840. Then 130 plus 416 minus 15,000 is 531. 531 divided by 1840 gives you 288. Okay, we forgot the carriage on purchases. So guys, if we're using the periodic inventory system, cost of sales, it includes the transport. Carriage on purchases is the transport that has been used to deliver inventory. So it forms part of the cost of inventory. So we need to add that, guys. Apologies, I am not a robot. We need to add that, which is 11,800. So here is 7,800. So 531 plus 11,800 is 542,800. Divide by 1840. It changes the whole game. It gives us 95. So this is when we're using the X method where we're taking. So now let's simplify the formula that we used here. X equals to opening stock plus is for the year minus returns minus stock returns plus average on purchases. Let's qualify this. And value and run value and run value and run value. Okay. So you divide all of this in quantity. So I just want to simplify this method that on top, it's all your rent values for opening inventory, purchases, and transportation, which is carriage. On the bottom, it's the quantities of the amounts. Yeah? Okay. Now let's see if we used this method. Okay. So I copy this as is. As this. If you want to purchase it, you will have to email me on moyopadis@gmail.com or send me a WhatsApp on 081833. Then we can arrange for the sale. Obviously, there's a more detailed slide than that one with original content. This is given, ne? Then they say to us, 60. Then they say purchases during the year. December. Then they're saying 60 airports purchased in December were returned. So we do this. Why then now it's minus 60. Okay. No, sorry about that. Okay. The weighted average on at this moment, it's 276. Then much. I found that. Okay. They gave us, there was 176. There's carriage and purchases for the year. No problem. No problem. So this is the value that we have at the end. So what is the average? Every movement, guys, if you notice, after every purchase or return, I calculate what's the average of the stock we have on hand. December, we had 1140 at an average of 276. March, we had 1640 at an average of 284. July, then. Now we have July. $200. They gave us the thingy here, the purchase price. At 66,000. Okay. Now the valuation is, watch how it changes. It's 289. Then they're saying that carriage on purchases. We are not given the number of units. It's the transport on all the units that we were purchased, which is the 15,000, and we didn't allocate per unit, but were given the full amount that was paid. So it's 295. Can you see, guys, it's balancing with that method we used for solve for X. 295, 295, ne? Okay. Now they're telling us something that they sold units at 1630, those sales. goods sold, don't mind the noise, goods sold 30. They do not give us this. Okay. Then they tell us the closing inventory 31 October closing inventory they are giving us is 176. So it would be at 295 because our weighted average is 295. But if you subtract here, we have 210. So which means there's inventory that was spoiled or stolen. Which is, I trust my x. X equals to 1,840 minus 1,630 minus 176. Equals to 1,840 minus 1,630 minus 176, which equals to 34. Valued at 295 equals to 34. So let's attempt the questions they're asking. So they say calculate the cost of sales. Oh, sorry, I'm looking at the wrong one. They're saying determine the weighted average of each earpod unit. So the weighted average, ladies and gentlemen, is the 295. I showed you how we calculated it in both methods. Okay, let's go to the second question. The owners are aware that some earpods have been stolen during the year. Determine the rent value of the theft that occurred during the year. It's 1030. Then here they're doing the questioning controls, so that I'm gonna do a separate video for it. And also here's the benefits of weighted average cost. I'll do a separate video for it. So that's it, ladies and gentlemen. Let's see if we are close to reality. There we go. They have 295. So the other method is 286. Remember, it would be 287 in my case. That's the method where you do not subtract. That's the method where you do not put the opening stock. But I'd like you guys to put the opening stock. That's the 1030, guys. You see the 1030 there. Guys, practice, practice, practice. Bye.